Good morning, traders. It is Thursday, the 31st of March, 2016. It's 8 a.m. Chicago time. Thanks for joining me. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. The overnight stance as it sits here today looks fairly mixed to bearish. The U.S. 10-year note is flattish. The Russell's flat despite the other indices being down. The bonds are up 0.04% at two ticks, and the gold is up $10, up to $1,239.20 for gold per ounce. But overall, we have a mixed bag. Crude oil trading at 38. The market has slid a little bit from yesterday's levels. But let's take a look at that here in a minute. For now, initial jobless claims came out a half hour ago at 276 versus 265, slightly worse. And overnight, there's chatter of China being downgraded, potentially being downgraded by S&P. That's had some weight on the market. Potentially, it's hard to pinpoint what it is that's driving things. There's no real clear news catalyst, but it's not relevant to the time frame that I trade in, so I don't pay too much attention to it. As far as what we're looking for ahead for today, at 8:45 Central, 9:45 Eastern, we're expecting U.S. Chicago PMI. The expectation is 50.8. I want to caution you again, as I do every month with this number. This is a private number and is released to members early. We generally hear rumors at about 9:38 or so Eastern. The members get the number around 9:40, 9:42, and then it's released to the public at 9:45. Generally, the market has already responded to that number. It is a fairly important number. It does move the market. Then at 10:30 Eastern, 9:30 Central, we have EIA natural gas storage change. And as far as speakers, we have Fed's Evans at 9:45 Eastern, 8:45 Central, and Fed Speaker Dudley at 5 p.m. Central, 5 p.m. Eastern, 4 p.m. Central. Let's start our session today, as we have been, with a review of the hypotheses from the prior day. Switches to 1080p. Okay, good. So what we have here, that's odd. This doesn't look like 1080p. There we go. So yesterday, the primary hypothesis was for a test higher to take out the overnight high right here at 6150. Expected an open auction out of range open, a test up, take out the overnight high, higher thereabouts, find sellers, and then rotate down. But as I said yesterday, low probability of closing the gap, given based purely on the range of the gap, 25.5%. Based on 1,400 days of 1,400 day sample. So the expectation is we end up with a gap zone. Yesterday, I did mention that video yesterday, and that's what we ended up with. Hypo 1 looked really good most of the day, but it didn't quite sell off the way we had expected for Hypo 1 to do. Hypo 2, again, let's switch this to 1080p. Hypo 2 is expected to open auction out of range, walk itself down, find buyers around the 2055 naked point of control, and then start to rotate up to that 63, 50, 64 key MC point of control area. That was Hypo 2, the plan there. Hypo 3 is what ended up playing out for the day. Hypo 3 slightly confusing in that it combines hypo 1 and 2. We're hypo 3, again, open auction out of range, slip down in a responsive fashion. Leave the gap, as you see here, marked from yesterday, leave a gap below, but eventually walk itself up towards that 63.50, but mostly be a rest day. So we expected this yesterday to be a continuation of the prior day's auction, which got cut off by the close, and for us to continue to be higher. And then I did say yesterday that the day after these wide-ranging days, I showed it on the daily, the day after a wide-ranging day, we tend to have, not always, but we tend to have a sort of a collapse in the range and a pause. And basically, Hypo 3 worked almost perfectly as we see here. So if we look at what we did yesterday, there it is. We open. We did not. We had a bit of an open auction out of range. It broke higher instead of lower first, but we did end up taking out the overnight high. We ended up taking out the MC point of control. The MC point of control is at 63.50. I had the price off a little bit yesterday at 64 and a quarter, but it pushed to 63.50 by 4 ticks, putting in a high. Very anemic volume up there. There was just no interest from buyers at those prices at all. You could see that the volume just collapses, and then a large rotation down to 54.50 to take out the MC, this naked point of control that I talked about just a few minutes ago. Pull back to almost the mid, didn't quite set up properly there, and then an attempt at a continuation lower, and then we end up pushing higher and closing outside of the initial balance. But we have a neutral day yesterday, it basically signifying discord with the direction. So what we had yesterday is both sides fighting it out somewhat, duking it out, and neither side really won. What this does look like is a sort of an M formation. It looks like a failure pattern. My expectation overnight is, hindsight, of course, coming on here and talking about it. Hindsight is 2020, but the expectation was truly for it to continue its pattern down. As you can see here, there was a clear trend forming on the close, with it being neutral and falling out of the IB. The expectation is it would trickle down lower, and it did. The market ended up selling off overnight to take out the gap close by a tick before bouncing back up and now trading the 2055, which again is this former naked point of control from December 30th. So that's very, very logical auction. Notice the gap zone here. The gap mid is 49.75, just the gap zone mid, not the close to open mid. So if the market starts to fall in here, you need to pay attention to the fact that this is most recently, this is an unauctioned area, and we treat that as an LVN zone, or low volume node zone, and we expect it to slowly walk its way down to the mid, fight it, and then slowly walk its way to the other side, to the high left behind from the 29th. So that's how things played out yesterday, okay? A review of yesterday. Let's take a look at the big picture since we've been running for quite a bit. So the MC I'm talking about is this one right here. Essentially, I'm taking the last time, or the most recent time we were in balance. So you can see the balance here. There's a lot of action, back and forth, back and forth, back and forth, back and forth in this zone, and it formed this microcomposite high volume node, and the microcomposite point of control is the one that was marked 63. 50 is the number you'll want to have up marked on your screen, and the cutoff point is that 20 1575, 2015-75. As long as we stay above the 2015-75 as discussed last week, then we are likely to take out this all-time high in the 2100 area. So that's how things are shaping up. We have done a clean test of the MC point of control. I did not draw this line today. This line's been carried over since January, August or October to January, and it's still something that is in play. We've tested it from below. The expectation is we rotate down, start moving towards the MC in this area, which I'll show you in a second. I expect it to chop around, and if it's got any more reason to go higher, then we'd look for it to go higher, fail, pull back to the MC point of control, and then find the energy to continue through to 2100. That's how things are shaping up right now. Okay, so that's the big picture right now. If I zoom this in and I bring the red profile into play, which is everything since the big drop happened in August. What was it? August 24th. Yep, August 24th. So if I look at all the volume across all prices using tick data and a combination of tick data and 1 minute data, um, we see that we are in some heavy stuff up here. Um, I know this is to call this heavy stuff is really for trading nerds, but this we are in a high volume area here. I expect this to be um, a very enticing area to battle. The market has shown that it likes value up here. It has traded a ton up here, and the expectation is it's likely to be a fairly turbulent trade through here. So just keep in mind just keep in mind that this is where we are in the big picture. So when you're trading during the day and it seems like it's just not doing anything and it seems frustrating and it seems like we're not going anywhere, the reason could be, I'm not saying it is, I'm not saying that this is the ultimate way to look at the market using volume profiling. I know I've been doing it for a long time and I believe in it. I believe it's a great, not that I believe in it, but I believe it's a great way to represent what the market is doing. Just remember that this is where we are. We're in this high volume node here, and to back it up, remember this starts August 24th and goes all the way through yesterday. To back it up, look at look at what we did last year from mid-January all the way to August. This is where we were, folks, between 95 on a continuous adjusted contract, 95 to the all-time high of 2100. We are in this box here, and the trading, if you recall, during this period was fairly erratic until we corrected and dropped and cleaned up a little bit. And I'd gone on several different programs, day trading radio, and so on, and talked about the market really needing to have a spring cleaning soon to kind of flush out the weak positions before it can take a test of the lower prices and then have what it needs to be able to push up to 2100. I know I'm using the sinful word need when it comes to talking about the market, but I'm just talking about the nature of the market, not that I'm imposing what the market has to do. Sorry, I had to cough there. So when we look at the overnight session, I'm out of time. When we look at the overnight session, we see very clearly here we have rotated the point of control up in the day session. We've rotated the point of control down in the night session. The point of control for the night session is exactly the same as the point of control for the day session. The market has drifted down overnight, broken down to that 47 quarter. Remember, 47.50 was the gap close and has pushed to the other side now and is trading above the middle. So this is a very tricky area here. 2055 is our short-term over underline. And right now, the way things are shaping up, it is likely to rotate up, more likely to rotate up and then down on the open. But we are basically opening just inside of range, outside of value, and we're likely to see a test of this naked point of control from yesterday. A very messy overnight profile, tight range, pretty decent volume, 249,000 traded. That's pretty good volume for an overnight session. So overall, it's not meaningful other than the fact that we have slid down and took out the gap close. But the gap close test is not valid unless it's done while the S&P 500 is open. I don't consider tests of key areas as fulfilled until it's done during the RTH session. So we're in between these two major points of control. The market is trading and it's got a gap zone. So right now the profile looks something like this with nothing in between, a small hump and then a big hump here for the MC. And we are basically opening on the lower edge of that HVN up here. So what am I expecting? I'm expecting a noisy open today. I want to remind you that tomorrow's non-farm payrolls, very key number. It's the second most important or highest tier number in the month, non-farm payrolls and unemployment tomorrow morning. So the market's likely to take notice of it, and you're likely to see some movement by the higher time frame to square up or hedge positions coming into the number. We just don't know what to expect there. So overall, I expect it to be a pretty choppy open. Because we're opening in range out of value, I expect us to push back up into this 55, 75, 56 area to close the point of control. If we push through the 56 area and pull back and hold this value low, this is a valid value area. We're likely to continue to push higher into the other side towards 2061. I would expect a 2061 test. That would be our primary hypothesis. I expect the open to be an open auction in range, fairly noisy. The better trade short term is an attempt higher, a squeeze. It looks like it's going to take off, takes out the overnight high, falls back through, and then starts walking down the gap zone. That would be hypo number two, the better hypo. Once we fill the gap zone, we are likely to push through this area and squeeze the longs down into the 43 or so, and then the ultimate price that we are likely to test is this 20, 40, 50 from above. That's how things are shaping up. I know that went for a while, but sometimes it takes longer to create a picture. Just remember, tomorrow I'm not in. I will not be in. I'm taking a day off. I need a break. So I will not be in tomorrow, but I'll catch up with you on Monday. And remember the talk I did for Big Mike, no nonsense approach from plan to execution. It is up on the YouTube channel. I suggest you subscribe so that you can be informed when any videos are posted. And then finally, for Stage 5 traders, we have our AMA as planned today. Take care.